ton of news, which we'll try to handle during the course of the hour. But we're going to start with Tesla, as the stock is under some pressure following Battery Day yesterday, as Elon Musk tended yesterday to perhaps underpromise. Early Tesla investor Ibrahim AlHusseini joins us this morning, founder at FullCycle, try to process the news that we did get, Ibrahim, and maybe to some degree the stock's reaction on the near-term news and the prospect of longer-term news. What was your takeaway?
Good morning, Carl. Good to be back. So yeah, it was an underwhelming announcement. There was a lot of expectations for the stock and for the technology that they were going to announce. And really, if you boil it down, what the announcement was, it was that there's a promising technological breakthrough that may or may not happen between now and the next 3 years if all these 19 stars align. And I think the market was expecting something immediate and something transformative. And I so appreciate Elon's desire to produce a greener, more recycled, higher density battery. But it seems like the technological breakthrough towards that are still speculative. So the market reacted negatively to that news. Right.
The bull cases that we're seeing built today say that if you were to be able to cut the cost by 56% in 3 years, it would have enormous ramifications on volume, implications for margins, and ostensibly positive for the stock. But I think Cramer said it best this morning. If you were a believer going into the event, you remain a believer. And if you weren't, maybe you're not.
Fair enough. I mean, it's absolutely true that the battery technologies worldwide, Teslas and everybody else's, will continue to get cheaper and better. So that's a given. That's just, the all laws that support technological breakthroughs support that theory. So that's already baked into the price. All the disruptive capacity of the technology is already baked into the price. There's everything else is just, sexy brand, Elon cult personality, who of course deserves all the credit in the world. But even he admitted before the stock split that it was too expensive. So this is all, the disruptive potential is already baked.
Ibrahim, I think we may have lost him. But Carl, I thought it was interesting. He just said that the disruptive technology already baked in. But a lot of folks are looking at the fact that Tesla is bringing that technology in-house. Oh, Ibrahim, are you with us again?
Yeah, I'm right here. Can you see and hear me?
Yes, you cut out for a moment. Let me pick up where you left then. You said that the disruptive technology is already baked in, but as I was just saying to Carl, the fact that Tesla is aiming to bring battery production in-house, sort of streamline that supply chain, that supply channel like other tech companies have done, does that build into the bull case, especially 3 to 5 years out?
I mean, let me quote Elon when I say that he said it's, 1,000 to 10,000 times harder to build the machines that make batteries. So this is, if anybody can do it, Tesla can. But unfortunately, and I hate to be down on Elon, but he usually does not always meet the timelines of which he expects technology to be market ready. So it'll happen. I don't know if it'll happen anytime soon.
Ibrahim, he can be modest on occasion. He said that he thought there was, little chance that SpaceX and Tesla would ever succeed when he cashed out of his shares of PayPal. Is this another case of him being modest? I mean, he's already beating the competition. Where does Battery Day place Tesla in terms of that competition with Volkswagen and others coming out with EV autos over the next few years? Not just 1 year, but a few years further than that.
So that's the biggest issue is Volkswagen. Volkswagen, after their issue with Dieselgate, had all this lead time to start pivoting towards EVs. So they have all this technology, all this momentum, all these models that are going to be entering the market, which some of them already have, and more as the years to come. So Tesla's had this entire landscape to itself, and now it's going to have to start competing with these legacy players who also have a lot of money, a lot of experience building really great interiors. People are used to them. They love some of these brands. It's going to be a lot harder it's going to be a lot harder to compete when there's a lot more choices for consumers in the market.
Right. Although we've been talking about that legacy competition for years and there hasn't been really anything substantial. What makes it different this time? And I go back to my point that Tesla bringing battery production aims to bring it in-house. Is that a game changer, that vertical integration that Tesla's now focused on that the other automakers aren't even thinking about?
So, well, I mean, so let's not listen to me for a second. Let's talk about the 33 different brokerages that follow Tesla. They have the price guidance $100 less than what it's trading on today. So the general consensus around this is a wonderful possibility. We all want it to happen. We're all cheering on the clean green revolution, and we want Tesla to lead it. But like I said, there's a lot of froth around the stock, and it'll eventually get there and warrant it. Maybe not this year, maybe not next year, but definitely sometime in the next decade. So there's not a lot of space for it to go any higher, because from now on, it's all speculation and it's all finger crossing hope.
Right. I wonder, Ibrahim, you're talking about the competition finally getting, I guess, their act together to some degree at scale. And I wonder if the recent examples that we've covered, whether it's Volkswagen, whether it's GM's strategy, and maybe specific to Nikola, but what's the biggest competitive risk that you have seen surface, say, in the last 12 months?
Well, the biggest competitive risk to Tesla is that, there's other places for car manufacturers to start buying these carbon credits that make up Tesla's profit, because Tesla loses money on selling cars right now and has made $428 million just off these regulatory credits that they sell to other manufacturers, so they can meet their mileage objectives. And, there's going to be more and more technologies that these car manufacturers can buy these carbon offsets from, and that's going to really hurt Tesla's free operating cash flow, because that's the vast majority of where it comes from.
Sure. Is that why you think they were not included in the S&P?
I think they weren't included in the S&P because the S&P doesn't want stocks that are going to go up, through the roof because of a lot of retail excitement, and then have, stocks plummet and then go up, because it's a very cult-based stock. It's not based on fundamentals. The value of the company is based on decades ahead projections, and that's going to have a lot of volatility through the year. So S&P is not interested in having those types of volatile stocks in its index.
Yeah, whether it's the positioning and the momentum, whether or not the committee looked through the financials and decided that the credits were too much of a crutch, we just don't know. But it was interesting decision. Certainly will be in retrospect too. Ibrahim, thanks for that. Yesterday was a big deal, and it's good to get your take. Thanks.
It's good to be here. Thanks for having me.